Last week's job numbers shows that the economy may be looking up, but there could be cons associated with that. In today's video, we're going to take a closer look at the pros and cons of last week's job numbers, the returns from last week, and a deeper look at the Dow Jones. In a shortened trading week, the U.S. markets continued to perform well, with the S&P 500, the Dow Jones, and the Nasdaq all up over 1%, while the Russell 2000 lagged a little bit but still up over 0.5%. And now, year to date, the S&P 500 is up over 20%, while the Nasdaq still leading the way, up over 23% for the year. Foreign and emerging market stocks were positive last week as well, both up a little bit over 0.5%. And now, year to date, foreign market stocks are up over 15%, while emerging markets are up over 11%. Over the past few weeks, we've seen the Nasdaq and the S&P 500 break out and clearly make new all-time highs. But over that same time frame, the Dow Jones and the Russell 2000 were lagging. But today we want to look at the chart of the Dow Jones because last week the Dow actually broke out and made and held their all-time high. So if you're looking at the chart here, you can see that the Dow Jones has been trading in a range for almost the past 2 years and has failed to break out above the top line, which is that long-term resistance level. So there's been 4 times over this 2-year period. January of 2018, October of 2018, May of this year, and then again last week, July of 2019, where the Dow Jones made a push up to all-time highs but couldn't break out. And as I said earlier, last week we did ultimately see the Dow Jones break out and make those new all-time highs. So I say this a lot, but we're at a very important level here on the Dow Jones because we want to see a continuation here above the top blue line and have this breakout hold. Because if we don't see this breakout hold, as you can see what happened over the past 2 years, the Dow Jones has dropped down into the middle and even the bottom of that range once it got rejected at the top line. So what happens here at this level is extremely important because it could certainly affect the markets here for the second half of the year. The first and most important news story from last week is that the U.S. economy added 224,000 jobs in June. And that's the strongest month we've seen this year since January. Now it's a strong rebound from the 72,000 jobs that were added in May. And there's a lot to be encouraged about here because there's more job applications and higher wages that are bringing people now off the sidelines. Also, wages have risen at 3% annualized for 11 months now. And that's the strongest that we've seen in over 9 years. Now, all of that's good, but there is a con here. And the con is that the Fed now may not lower interest rates in the short term. Now, the Fed still may cut rates this year, but it might not be as frequently as the market expected. So, in this case, good economic news is good news, but for the stock markets, bad news in the short term could also be good news because that might force the Fed to cut their interest rates quicker than they'd like to. So, we're at the point now where we'll see which is stronger, good economic news or expectations of a Fed rate cut. Last week also, oil prices held over $57 a barrel. And this is because tensions in the Middle East have investors a little bit weary of disruption in supply. And last week, Europe actually urged Iran to reverse its decision on their uranium levels permitted under the 2015 nuclear accord. But they did not threaten any sanctions. Now, after this happened, British forces seized an Iranian tanker that was carrying crude oil, which is just adding to those tensions. So as long as these tensions keep up, we might be paying a little bit more at the gas tank this summer. There are 3 things that we're watching this week. First, the US, Germany, and China all report their inflation numbers. Next, the Fed's FOMC minutes come out on Wednesday, as well as Chairman Powell's congressional testimony, which is on Wednesday and Thursday. And lastly, the second quarter just wrapped up, so earnings season is underway. These are all 3 things that could move the markets this week. Thanks for watching our video. If you're on Facebook, like and share the video. And if you see this video on YouTube, like and subscribe to our channel.